FHA loans are a great option for you if you need leniency on credit, higher debt-to-income ratios, and maybe some other credit factors from the past, like bankruptcy, foreclosure. FHA could be a good option. FHA stands for Federal Housing Administration. They're watched by the government, so it's a more government loan. It was created back in 1934 because it wanted to make home ownership available for more people. There was a lot of crisis going on. A lot of people laid off in 1934. And so this was an initiative to get things going. In fact, way back then, only 1 in 10 people were homeowners compared to 6 in 10 today. So it has really made a difference. Every year, FHA increases the loan amount available to borrowers through an FHA loan based on what home values are doing around the nation. So we're going to unpack that. We're also going to go through some of the pros and cons that you need to know of FHA loans to know if that is right for you this year. I'm Jen, by the way. Thanks for tuning in. Every week, I release 3 to 5 videos, real facts, no BS, about the mortgage process so you can make good decisions and find the home of your dreams. Okay, let's get going. FHA Loan Limits 2025. Here we go. In my 29-year career, I have seen FHA loan limits increase over a dozen times. In fact, like 16 or 17 times, except like 2008 to 2016-ish, they were stagnant, and that's because values were going backwards in those years or stabilizing, and so it was all kinds of crazy back then. But in general, they go up because the home values around the country go up. Now, the amount is determined by what the conforming loans are doing. So the Federal Housing Finance Agency, different than FHA, govern the conventional loans, which is another type of loan. FHA and conventional loans are the 2 main types of loans really in the country that most of the people get. Now, the conforming loans, every November, they have a formula, they have an algorithm, and they decide, okay, what was the average price last year in the third quarter, and what is it this year? They divide the numbers by each other and they come up with a percentage. And that dictates we're going to increase the amounts by that much. So the conforming loans come out with that information every November. And then FHA, Federal Housing Administration, follows behind and says, okay, we're going to adjust our numbers to about 65% of their number. That's how it's calculated. Now, also, I'm going to put a map up on the screen. I just think it's super interesting. I want you to understand that if you live in a high-cost area, and if you're not sure, I'm going to put a link in the description. You can put in the county that you live in, and that will tell you the limit in your county for FHA. Now, most of the country is going to be around the same. But if you see, there's some places on the East Coast, some places on the West Coast that are high-cost areas. Those counties are more expensive to live in, and those limits are going to be higher in those areas. Okay, so ready for it. So this year, drum roll, the amounts for FHA loans has increased about 5-6% from last year, and the baseline number for a 1-unit property is $524,225. Now that's a mouthful. I don't know why they don't just round it up and make life easier, but this is the way that it is. Now you can see on the chart, if you're buying a 2, 3, or 4-unit property, which you can do with FHA, the amounts are higher. Now, on the right side of the table, you're going to see that if you're in a high-cost area, you're going to be able to go up to those amounts. If you're in a high-cost area, usually California, New York, New Jersey, you can go up to a whopping $1,209,000. Like, that's a ton of money. But therefore, it costs more to live where you live. So I guess that's fair. Now, we're going to go on to the benefits and the superpowers of an FHA loan. This loan is not only for first-time buyers. That's actually a myth, and some people think that the FHA loan is the first-time buyer loan. Actually, anybody can get an FHA loan. You can have bought 10 homes before. Now, there are some restrictions. It has to be your primary residence, and you cannot have another FHA loan. There are 4 or 5 different exceptions on having 2 FHA loans. I've got another video about it. I'm going to put it down in the description so you can watch it later if you think that applies to you. But for the most part, you can only have 1 FHA loan. But the cool thing, back to the superpowers, is that you can put as little as 3.5% down, no matter how many houses you've owned in the past. That is great. Now, of course, you have to qualify for the payment. The other cool feature is that mortgage insurance is the same for everybody. So if you're someone that has one of those lower credit scores, mortgage insurance for 680, 640, 620 is the same as someone who has a high credit score. Now, someone who has a high credit score is probably using FHA for a different reason, which I'll go over next. Another superpower that we have is high debt to income ratio. So FHA loans is one of the loans that has the highest threshold for debt to income ratio, and that is 55%. Now, sometimes we're able to round up and it's 55.3, 55.2, and it kind of actually rounds down, so 55, okay? Some people really need that extra kick to get over the line and get the house that they love. So that is a superpower of an FHA loan. Now, credit. Credit is really lenient on FHA. They'll go down to 580. Now, there are a few lenders around the country, it's rare, that will go down to 550. I don't know who they are. You're gonna need to check it out on the internet if you're one of those people, but beware, they're gonna want you to put more of a down payment. So I would say if your credit score is below 600, you're gonna need to probably be prepared to put 10% down because it is more strict. But I want to call it the bling zone, the safe zone for FHA, from my experience, I originate lots of loans for lots of years, is to get and aim to be above 640. 640 is usually a safe zone. You're going to have access to down payment around the country. Down payment assistance usually is tied to credit score as well. 640 is safer, and that's where the interest rates are a little bit better as well. When you get below 640, what I notice is the interest rates are a little higher, the fees are maybe a little higher because you're more risky. You're not a good credit risk, and so they're like, hey, we're gonna loan to you, but we need a little extra money. So be prepared for that. The other cool credit thing is that FHA is super lenient on bankruptcy and foreclosure. In fact, I've done a loan for someone who was in a Chapter 13 and in the middle of bankruptcy, and she got permission from the judge, and she'd been paying payments on time, and we were able to close while she was in bankruptcy. Now, that's not always the case. There's other types of BK, and you need to usually wait about 2 years, but that's way more lenient than other types of loans. Now, foreclosure is 3 years, which is much more lenient than its sister loan, which is conventional loans, which they're like 7 years. So if you've had a credit event, know that FHA loans could really be the loan for you. Okay, manual underwrite. So everything is automated these days, y'all. Not like the days back. I got in the business in 1995. I used to have files this thick. Everything was manual back then. There wasn't even really credit scoring other than, like, I had to wait 4 hours for a credit report. I will never forget. I used to have files this thick, and I would drive my car, a little Toyota Camry, and I would go over to the underwriter's office, and I would hand her this file, and I had highlight, I had colored paper. My files were beautiful, okay? And I'd put on my best song and dance, a very good actress, and I'd be like, hey, this is why they deserve the loan. I would spend like 30 minutes with the underwriter, okay? It was, a lot of times it was successful, but everything was manual back then. Fast forward, like after around 2000, 2001, everything started getting automated. All this auto. So that's how things are done now. It's very rare that you can do manual, but FHA allows for manual underwriting when the automated system puts up a red flag. If there's compensating factors, if your credit score is above 600, manual underwrite might be for you. So this is a superpower of an FHA loan. If you think that applies to you, make sure you ask your lender about it. And lastly, seller credits. FHA has the highest seller credit applicable 6% of the price can go towards closing costs and prepaid expenses like insurance and taxes. It cannot be applied to any part of the down payment, so beware about that. Now, what to watch out for, just a couple of things. If you're buying a house in a community property state, we have to pull the credit of the spouse. If you're legally married, not if it's like a live-in or like whatever, but if you are legally married, we have to pull the credit of the spouse, even if they're not on the loan. We don't care about their credit score, we care about their monthly debts. So that's a big one, okay? So talk to your lender to see if that applies to you. The other is, we mentioned about credit. When your credit's below 640, there's usually some hits to the interest rate, but talk to a lender early, get some credit homework. That hopefully will solve itself. Now, this is a big one. If you want to rent your current home and use that rental income to offset that payment, you can't do it on FHA. If the new loan that you're getting is FHA, and that's the only loan you qualify for, it will not allow rental income from your existing property. So this one is huge. If that needs to pertain to you, then you need to see what you can do and talk to a lender on how can I qualify for a conventional loan. So I'm going to put a conventional loan video down in the description so you can know the ins and outs of a conventional loan. Okay, this is the big one. PMI, mortgage insurance premium, PMI. You can call it what you want. Don't get confused. It's all the same thing. It is a monthly insurance to the lender for this being a low down payment loan. And the downside of FHA is that it applies to everybody. You can put down 50%, a lot, and you still have PMI. So for this reason, that could be a deficit if you look at it that way. You could also look at it as if you've got tainted credit or high debt, there's no other loan, y'all. It's FHA is the queen of the universe, super lenient. Now, I know what you're thinking. Jennifer, it's an extra cost. I want you to look at this chart about homeowners have a higher net worth than renters. So renters, I'm talking to you right now. Average renter net worth is $10,000. This is all factual census information, y'all. Homeowners have an average net worth of $450,000. That's a huge gap. So my advice, don't be worried about a little bit of extra costs called mortgage insurance. At the end of the day, I want you to have that higher net worth because your house is going to be appreciating over time. And that's going to be the money, the big down payment that you're going to put down on the next house. That is how people build wealth. So there you have it. We've got the new 2025 limits. We've got pros and cons of FHA loans. Thank you for watching. I want to hear your questions. Talk to you soon.